Thank you for watching the Wealth Guard Show. I'm your host, Tom White. Well, it's the first week of earnings season here, but that was mostly overshadowed by Congress and whether or not they're going to get a deal done before we default on our debt. We'll do our IBD 50 portfolio first, and we'll take a look at our economic mechanics in the second half of the show here and have your full forecast and let you know what you should expect next week. But first, we're going to go through a question of the week here. Do you think Congress will get a deal done before we default on our debt? And I'd like to know what you think about that, whether you think they'll get it done or what kind of deal do you think will be done? Will somebody crack? Will somebody be a little weak under pressure here? What's going to happen? What's your opinion? So let me know in the comment section down below on YouTube here. And we begin our IBD 50 portfolio. And our holdings going into this week, we got Netflix, our first place winner last week, starting out at $295.14. And Bridgepoint Education starting out at $27.25. GT Solar, which came in third place last week, $16.51. And Biogen survived the portfolio last week, starting out at $107.39. And New Skin Enterprises is the new addition to the portfolio. We picked up 45 shares of that stock, starting the week out at $39.74. We got a total gain going into the week of 22% in this portfolio. One of these stocks, the worst performer, is about to get sold. Let's see how we did. And our number one performer this week, coming in first place, it's Bridgepoint Education. And starting out the week at $27.25, we closed the week at $28.25. Had a total of 3.67% gain in the portfolio, or $83. Let's take a look at the chart. And on the chart of BPI, we can see down below, 0.1, the stochastics are in overbought territory, and the black line's converging on the red, so we gave this one a yellow mark. We're going to keep an eye on this. Above that 0.2, we see that the MACDs are still moving higher, but the histogram bars have flattened out. So we gave this one a yellow mark. And up top, 0.3, relative strength index is going sideways here, so we gave this one a yellow mark too. And our number two performer this week, coming in second place, it's New Skin Enterprises. And it's the new addition to the portfolio, starting out the week at $39.74 and closing the week at $40 even. Got a total gain of about just a little better than 0.5% and $11.70. Not a lot there, but it's a gain nonetheless. We'll take a look at the chart. And on the chart of New Skin Enterprises, down below 0.1, the stochastics, they're in overbought territory, but the black line crossed over the red and gave us a bullish signal here. So we gave this one a green mark. It's looking pretty strong. Above that, 0.2 shows MACDs, they're continuing higher. Histogram bars have moved up higher too, so we gave this one a green mark. And up top, relative strength index, it's moving higher. We can see that it's been trending higher since June too, so we like that. We gave this one a green mark. And our number three performer, coming in third place, it's Netflix. And Netflix opened the week at $295.14, closed the week at $286.93. Had a loss of just better than 2 3/4, or total loss of $82.10. Had a little news coming out this week, if you haven't heard, I'm sure most of you have, that they're going to start charging extra for delivery of DVDs, and they're going to have some competition from Blockbuster and some other companies out there too, and a lot of people are dropping membership. Not good. Let's take a look at the chart. And on a chart of Netflix, down below, 0.1 of stochastics, we can see we got a rainbow forming here, and the black line crossed over the red. This is bearish, so we gave this one a red mark. And above that, 0.2 shows the MACDs are converging. The black line's moving in on that red line there, and the histogram bars have been dropping, so we gave this one a yellow mark. And up top, relative strength index too, it's losing steam and it's falling, so we gave this one a yellow mark. We're going to watch those MACDs because I think they're going to confirm the move in the stochastics here this week if the stochastics themselves don't recover. And that only leaves room for one more stock in this portfolio. One of the stocks is going to remain, and the other is going to get sold. The first stock up, it's Biogen. Biogen was in this position last week, fighting it out, and it battled and beat out Hanson Natural and survived the portfolio. And this week it's battling it out against GT Solar. Now GT Solar had a good profit last week and gave up a lot on Friday. Continued downward again this week. Coming in fourth place. And remaining in the portfolio, it's Biogen. And so Biogen does it again, opening the week at $107.39. It closed the week at an even $104. Total loss of 3.16% or $67.80. Let's take a look at the chart. And on a chart of Biogen, it's not looking good at all. Down below 0.1, the stochastics have continued lower and then negative, gave it a red mark. And above that too, we see we got continued confirmation in those MACDs as the black line crossed over the red, gave us a bearish signal. Histogram bars are continuing lower too, and they're continuing below the zero line. That's negative, so we give this one a red mark. And up top, relative strength index continues lower, and we gave this one a red mark. And so GT Solar is out of here. And opening the week at $16.51. It closed the week at $15.14. A total loss of 8.3% in the portfolio, or $230.16. That's not as bad as it was earlier in the week. Let's take a look at the chart. And on a chart of GT Solar here, we see down below 0.1, the stochastics look like they may be getting ready to improve here as the black line's moving in on the red. Hasn't quite given us that bullish signal yet, so we gave this one a yellow mark. And above that, 0.2 shows the MACDs are still in decline, and histogram bars are also dropping still, so we gave this one a red mark. And up top, relative strength index. It's continuing sideways here like it's trying to make a bottom, so we gave this one a yellow mark. And our results from this week, we got Bridgepoint Education in first place with 3.67% gain. New Skin Enterprises came in second place with just a little better than a 0.5% gain. And Netflix came in third place with a little better than 2.75% loss. And Biogen survives the portfolio for another week, 3.16% loss there. And GT Solar with a big loss of 8.3% this week. Had a worse loss though for most part of this week. We hit a low of 13% on GT Solar here. Gotta warn you, when these stocks drop, they really do drop. And that's why we sell the worst performer of the week, so we don't get caught up in anything. And total this week, we got a loss of $285.36, or 2.39%. And so we get a new stock in the portfolio. And this week, our new stock, it's CRB Ceramics. And CRB Ceramics, symbol CRR, has a market cap about $4 billion. Average daily volume about 328,000 shares. CRB Ceramics manufactures and supplies ceramic propants primarily used in the hydraulic fracturing of natural gas and oil wells in the United States and internationally. Let's take a look at the chart. And you can see the strength in the chart down below. 0.1 shows stochastics. They got a bullish signal here as the black line crossed over the red and they're reaching higher. Gave this one a green mark. And up top above that, 0.2, MACDs. They were converging on each other, but now they're recovering here, and the black line's starting to move a little higher. And the histogram bars have picked up too, so we gave this one a green mark. And up top, the relative strength index, point number 3. It's also moving higher after establishing a base here, so we gave this a green mark. Also have a nice trend moving in since the beginning of June here on the relative strength index, so like that one. Total green mark. And our holdings going into this week. In first place this week, it was Bridgepoint Education, starting out now at $28.25. New Skin Enterprises came in second place, starting out at $40 even. Netflix. We're starting out at $286.93. We're going to see if we can recover this week. And Biogen survived the portfolio for the second, maybe even third week in a row. I don't know. Starting out the week here at $104 even. This thing needs to pick up soon. And it's the new addition to the portfolio, Carbo Ceramics. Picked up 14 shares of that stock at $172.59. Carrying cash of $422.28. We got a total value in the portfolio of $11,932.59. Total gain of just a little better than 19.25%. We had a little pullback this week, but still we're ahead of the game since January 28th. Well, these stocks, they've got to perform or else they're out of here. And we move now to our economic mechanics from this week. And for those who've been watching the show, then you know that this economic mechanics are based on three key principles. And the first key principle, the US dollar and commodities, they move in the opposite direction. And number two, commodities and interest rates, they move in the same direction. And last, number three, high interest rates, they're bearish for stocks. And as always, we begin with the US dollar. And on the daily chart of the US dollar, down below, 0.1, you can see the stochastics give us a bear signal here as the black line crossed over the red and heading lower, gave this one a red mark. And above that, point number 2, we see that the MACDs here are trending sideways here, and the black line's starting to move in on that red line, and the histogram bars are moving toward that zero line. They're dropping. We give this one a yellow mark. And up top, point 3, the relative strength index is moving sideways here, and it's been trending that way for a while, so we give this one a yellow mark too. And on the weekly chart of the US dollar, we can see that the stochastics, they're starting to lose a little bit of steam here, and the black line moved in on the red and has crossed, but it's not decisive yet. It is bearish. We gave this one a yellow mark. And number 2, we see that the MACDs, not a lot going on here, and the histogram bars are flat, so we gave this one a yellow mark. And up top, relative strength index is going sideways too. All is quiet with the dollar on the weekly chart. And summing up the US dollar, we analyzed the daily chart and the weekly chart. On the daily chart, we found the stochastics were negative and bearish, so we gave them a red mark. MACDs and relative strength index have not confirmed that yet, and they're neutral, so we gave those yellow marks. On the weekly chart, we noticed that the stochastics, the MACDs, and relative strength index are all neutral. There wasn't a lot going on there, so we gave them all yellow marks. For a total, we had 1 red mark, 5 yellow marks, and 0 green marks. And we look now at the commodities, represented by the CRB Index. And on the daily chart of the commodities, we can see down below, 0.1, the stochastics are in overbought territory, and they're just moving sideways, so we give them a yellow mark. And above that, 0.2 shows the MACDs are moving higher, but the histogram bars have dropped, so we gave this one a yellow mark. And up top, relative strength index, we can see it looks like we hit a top on the relative strength, and we're starting to move a little bit lower here. A little caution is advised. We gave this one a yellow mark too. Over on the weekly chart, down below, the stochastics are looking positive here at 0.1. Black line crossed over the red from oversold territory here, and that's looking good, so we gave this one a green mark. Above that, point number 2, MACDs are starting to converge on the each other here as the black line's moving in on the red, and histogram bars moving toward that zero line. We're going to look to see if that confirms the movement of stochastics this week, but for now, we gave it a yellow mark. And up top, point number 3, relative strength index looks like it's making a bounce and a move higher here, so we gave this one a yellow mark. And so summing up the commodities, we analyzed daily charts and the weekly charts. On the daily chart, we found the stochastics, the MACDs, and relative strength index were all neutral, so we gave them all yellow marks. On the weekly chart, we got a nice bullish signal on those stochastics, gave them a green mark. MACD's relative strength index had not confirmed that move yet, so we gave those yellow marks. For a total, we had 0 red marks, 5 yellow marks, and 1 green mark for the commodities. And we look now at the 10-year Treasury yields. And on a daily chart of the 10-year Treasury yield, down below, zero point 0.1, the stochastics are in oversold territory, and they're just moving sideways here. They're still negative. We gave it a red mark. Above that, point number 2 shows where the MACD is still confirming that move in those stochastics. They're continuing lower, and the histogram bars are continuing their drops. We gave this one a red mark. Up top, relative strength index is still dropping. Trend is still down too, so we gave this one a red mark. And over on the weekly chart, looks like we're getting a bullish signal down below in those stochastics. Point number 1, black line crossed over the red and oversold territory here. Moving up a little higher here. Want to see a bigger move past that 20 line there. So we see that will turn this one green, but for now it's going to be a yellow mark. But above that, MACDs are still negative as they're falling lower, and the histogram bar has dropped too, so that's a red mark. Up top, relative strength index is also falling again, so we gave this one a red mark too. And summing up 10-year Treasury yield, we analyzed daily chart and the weekly chart. On the daily chart, we found the stochastics, the MACDs, and the relative strength index were all negative. Gave them all red marks. And on the weekly chart, stochastics were neutral, gave it a yellow mark. But the MACDs and relative strength index were negative, gave them a red mark. For a total, we had 5 red marks, 1 yellow mark, and 0 green marks. And we look now at the Dow Jones Industrial Average. And on a daily chart of the Dow Jones, down below point 1 shows the stochastics are starting to improve a bit here, and the black line's converging on the red, getting ready to give us a bullish signal here, but for now we give it a yellow mark. Above that, point number 2 shows that the MACDs, they look like they stopped falling here, and they're starting to level out here, and the histogram bars, they're still dropping a bit though, so we give this one a yellow mark. And up top, relative strength index moving sideways, we had to give this one a yellow mark too. And on the weekly chart down below, point 1, the stochastics got a nice bullish signal here as the black line crossed over the red, and it's moving sharply higher. Gave this one a green mark. Above that, though, point number 2 shows the MACD is still leveling off here, not confirmed those stochastics, so we gave this one a yellow mark. Histogram bars also have not crossed that 0 line either, so continued with that yellow mark. Up top, relative strength index. So we got a little hook here, and we got a downtrend since January here, so we give this one a yellow mark too. And so summing up the Dow Jones Industrial Average, we analyzed the daily charts and the weekly charts. And on the daily chart, stochastics and MACD, the relative strength index were all neutral, and we gave them all yellow marks. On the weekly chart, stochastics were very bullish, gave it a green mark. MACD's relative strength index had not confirmed it yet, so we gave those yellow marks. For a total, we had 0 red marks, 5 yellow marks, and 1 green mark. And so we've been coming up with scores for the US dollar, the commodities, the 10-year Treasury yield, and the Dow Jones Industrial Average, looking for where the strengths are and where the weaknesses lie. We did this by analyzing the number of positives and weighing them against the number of negatives and coming to a conclusion that way. And this week we had a tie in first place. We had the CRB Index and the Dow Jones Industrial Average with 1 green mark, 5 yellow marks, and 0 red marks. And in second place this week, it was the US dollar, falling a bit from last week. We had 0 green marks, 5 yellow marks, and 1 red mark. And in last place, it's the 10-year Treasury yield as 0 green marks, 1 yellow mark, and 5 red marks as interest rates continue lower. And we take a look now at our market gauge. The object here is to be as far in the right column as possible in bullish territory and as far away from the left column in bearish territory as possible. And this week in first place, it's actually the 10-year Treasuries, as we had the 10-year Treasury yields, the inverse of the Treasury prices, looking very bearish. So that means money's flowing into the Treasuries and they're looking strong. They came in really first place this week. And then we had a tie between the Dow Jones Industrial Average and the CRB Index. Both of them are really neutral right now with 1 bullish tick to them, so not a lot going on there. They're kind of flat. US dollar has dropped significantly. It's down into 4th place here. And it was in first place last week with 6 clean green marks and nothing else, 0 reds and 0 yellows. But it's starting to weaken a bit here. And the 10-year Treasury yield, it continues lower and it's looking bearish. So again, we got that as the inverse of the 10-year Treasury prices, and it looks like bonds are the place to be still. Going to keep an eye out though on the bonds this week here too, as Congress is battling it out here to try to do something so we don't default. Well, that's all from our show this week. Tune in again next week and we'll do it again. Feel free to give a call, 303-818-7807, if you'd like to learn how to apply these techniques to your portfolio. But for now, I'm out of here.